Hi everybody, Chad Shoop here. Welcome to a brand new edition of my Bank It or Tank It segments, where this week we're going to be breaking down just one stock, but as we go through it, we're going to be able to talk a lot about what's going on with the broader market and just how we're trading in this volatile period right now. Anyways, to begin with, what we're looking at with stocks to take away from that in this volatile period and how to trade them. So we're going to be talking about a lot of generalities today. So as we go through this, though, any other stocks that pop up on your mind, any stocks that you want me to take a look at, just remember that my whole Bank It or Tank It, all these videos that I do are really dedicated to you all and the stocks that you all want me to take a look at. So be sure to scroll below and leave me a comment just below this video. Let me know what stocks you want me to feature in an upcoming video, because next week I'll go through several more stocks. And then make sure you join us on our live video that we do right here through YouTube and with the True Options Masters on the second Thursday of the month. We go live here talking about all the stocks that you want me to take a look at. You can leave them in the comment box and we just dive right into them there live, real time. So the stocks that you all leave me today, we're going to feature here in an upcoming video. So take a moment, leave me some stocks below, click like, click subscribe if you enjoy my videos, so that way you don't miss out. And now today we are diving into just one stock, so I wanted it to be one that we could really touch on this broad base moves that we're seeing in the market, the volatility that we're seeing. So our stock today is Amazon. So the online retail giant, one of the big FANG stocks. We talked about it in our options arena last week. So those have been great topics to kind of carry on the conversations from. But Amazon is a stock that I believe over the next 5 to 10 years is going to be an outperformer. It's down 40 to 50% so far here from the peak to the bottom, and we'll pull up the charts in a little bit. But as we go through it today, look, Amazon is a company that at the end of the day, they don't have this brick and mortar retail outlets to deal with. I mean, they bought Whole Foods, so they have some exposure, but not to the extent that like a Target or a Walmart does. So they're largely online. People, with gas prices higher, they're going to become more price conscious on how they spend. They're going to want to shop around a little bit. And Amazon has a very good footing to be competitive in that type of environment where, I don't want to go to 5 different stores and look at prices, or, drive 30 minutes to my local Best Buy just to pick up something. Instead, I'm going to hop on Amazon. It'll be at my house in a day, super quick shipping, free turnarounds. I think that model that they have is going to be one that holds up the best here in this volatile market, in a recessionary environment, which is what I think we're heading into. I think we're heading into a recession. I think the Fed's moves last week were really the red flag in the market right now, that they are not worried about a recession, even though all signs are kind of pointing that our economy is heading that way, thanks to inflation, thanks to the Federal Reserve tightening. I mean, interest rates are continuously heading higher now that they have been upping their ante here on their Fed rate hikes. They went from a 0.5 percentage point hike. They did that 2 times. Now they're at 0.75 percentage point hikes that they did last time. They're probably likely to do it again here next month. So they're saying that, really they're definitely worried about inflation. And to me, that means that we should really be worried about inflation. And what we've seen so far, it's definitely not transitory, is what the Fed, has said since the pandemic, is that these higher prices were just going to be kind of passed along and that they would come back down. Doesn't look like that's the case at this point. Now they're really trying to nip it in the bud before it gets out of control. So I think that that's really kind of what set up my bearish take that I laid out earlier this week in an article. So with that kind of being the backdrop, diving into Amazon, just know that I'm a trader, and that, all these big kind of moves that I'm seeing in the market, or maybe that the Fed's tipping me off to, we get volatile moves from day to day in the markets now. So we can get a quick dump in the market, in 1 week that really flushes out a lot of this negative news that we're talking about. And then the markets are free to rally, the markets are free to move higher. So from week to week, my take will change in the markets. And I want to keep talking about it to keep that dialogue open and kind of what we're seeing with this overall volatile period that we're in, because it is definitely a one-of-a-kind market environment that we are in right now. So I want to help you navigate that as much as possible. Shortening time frames with trades has really helped out a lot, because there's really been nothing trending other than to the downside. So any quick pops that we get have been tended to be the perfect times to take profits and move on. So let's look at where Amazon's at today. We always want to start with some key stats as we go through my Bank It or Tank It analysis. So here we have the net income and total revenue for Amazon. We're looking at the net income as the line on the graph. Total revenues are the bars on the chart. Now you can see net income's taking a dip here in 2022. Expected to kind of level off in 2023 and then back to rising in 2024. Now, the revenues are not really showing that same hit. Their revenues are slowing. This is just total revenues. So we see that they had solid growth from 2018 up to 2021. 2022 is really a leveling off of revenues for the most part, not a big jump. But then they expect revenues just to continue stronger in 2023 and 2024. And this is all kind of with the expectations that we have priced in the market right now. We know the Federal Reserve's in the middle of an interest rate hike cycle, so we're seeing that be factored in to slow down the company. We are seeing the higher inflation prices be factored in. So this is all kind of what's known, and that's why when we look at these expectations and what's laid out for the chart, it's all from today and then looking forward. As this data changes as we go forward, this chart's going to change too. But right now, this is a pretty promising looking chart. Just the fact that revenues are expected to hold up pretty nicely. They're not taking a loss in revenues or a decline. Instead, revenues are just going to kind of level off in 2022 and then go back through another nice jump in 2023 and 2024. And that's ultimately going to be what carries around the net income to help that improve over the next couple of years as well. Now, another chart that we always like to look at is the quick comps. We want to compare Amazon to some of the competitors that come up here in the SP Capital IQ platform. And if you know Amazon, and there's not really a good direct competitor to look at. I mean, we have Google, which is up there with a 1.4 trillion market cap. So it's a massive company, but so is Amazon. Over $1 trillion market cap. Now, the next closest on this whole list is Meta Platform. So that's a social media stock, actually more of a virtual reality stock at this point, now that they're called Meta Platforms, formerly known as Facebook. And then from there, I mean, no company is even near the same level. We have other social media stocks that came up on this with Twitter, Snapchat. Then we have some other online sales companies like Chewy, which is a dog company, Etsy, which is small local brands. Just really all over the place here with the quick comps that they're trying to pull up. And this is just an algorithm that they use. You can see that's internet and direct marketing retail. That's their primary category that we can see at the top. These are just some other companies that fall into that category, but let's face it, Amazon is the top dog. And when we look over at the revenues over the last 3 years, they're coming in at 25.5%. I mean, this is impressive because it's a massive company. I mean, Google's doing pretty good too, 23%, but they're not a small cap stock. So compared to the average of these companies that they have here, the mean is 23%. So Amazon as a large cap stock and along with Google are doing fairly well, growing their revenues at a steady clip of 25.5% over the last 3 years. That's the compound average annual growth rate over 3 years. Now the net income, 21%. So pretty solid. It's below the mean, which is 24.88%, but you can see up on the chart wherever they have a dash, those companies don't have, positive revenue growth over that same time period for them to look at, or they didn't have, in some cases, any net income to look at. So that's really throws it off a little bit. We have Twitter losing 44% per year. And then we have the big winners as eBay and Etsy up above 60%. But for the most part, Amazon coming in at a steady clip of 21%. Again, it's great to see that the company Amazon is still growing sales, growing revenues here over the last 3 years, a nice steady pace that we are seeing. And this was really depicted on their chart. I mean, we expect net income to take a step back this year, but then more of that steady growth to pick up after this. Now, let's look at the sentiment and see how traders are really pricing all of this information in. So Amazon price to earnings ratio here for the latest is 51 times earnings. Now, that's a high number. We saw that this company had steady net income, but then we know that it's taking a dip right now. So investors are really not discounting the stock for that dip yet. That's what it's showing. The dip in net income is not being priced in, whereas Alphabet, Meta, they're being priced at 19 and 12 times earnings. That's normal market prices for these types of stocks. Etsy around 24 times earnings, and the mean here is 52.5. So the mean for Amazon is coming in right there around 50 times earnings. But, look, the S&P 500 right now has a price to earnings ratio. It's down to just 16. That's the average in the S&P 500. This is down from, it was up to 22, 24 times earnings not that long ago. So the earnings multiple is definitely contracting. And then for a stock like Amazon, it still could fetch a high multiple. That really tells you that some of the selling pressure is not priced in just yet. The short interest now, we move on as a percent of shares outstanding. Now, normally when this is high, it means that it's super bearish. Nowadays, when it's high, people are looking for short squeezes. But we can see Etsy is the highest at 11, then Quotient Technology at 7.2. Amazon's just at 1%, so not a lot of people are really bearish on the stock just yet. That the average here is 4.6, So Amazon well below the average. Not a lot of worries there as far as the sentiment on betting this stock to continue to decline. The average broker recommendation, a 1's being a strong buy, a 5's a strong sell. They're at 1.42, so it's a solid outperform rating here from the average analyst community. The average for these stocks is 2.1111, so they're doing better than average. And in fact, the only company that's doing better right now is Alphabet at 1.3. So other than Alphabet, Amazon's the second highest rated stock here on the list of stocks out of these internet and direct marketing retail companies. Now, before we get into the price chart, another element that we've added more recently that I love to go over is unusual options activity on the individual stocks that we look at. And these are great sentiment indicators. They're great to see how traders are really trading the stocks, where the big money is behind this company. And one came up, so we don't have to look through too much here. I already have it pulled up. This is June 13th, 10:30 in the morning. We have the big money, 1.7 million. You can just see through here. I already have it filtered to 100,000, and none of these other stocks or none of these other trades got to a million. And this is me scrolling back up to basically today. No big $1 million trades come up as unusual until we scroll down and finally hit this trade that we wanted to talk about. This is the September 16th, 105 calls. And when we look at the price chart, this is really going to back up why I like this trade. But look, remember June 13th and 105 calls, that's what they got in. They ended up paying $9.15, and it was a sweep, which means that they did this with a sense of urgency. They were ready to jump in and pretty much at whatever price they could get filled at and expect this thing to run higher here over the next couple of months. They bought out to September 16th. So they bought 3 months of time frame. And look at what this came after. So let's pull up the price chart here on Amazon, and let's zoom in on the 13th when they made this trade. This is after the stock. It was on a nice rally, had rolled over back down to this support line that I have highlighted. This is the day that they jumped in, June 13th. That looks like a great opportunity to try to pick a bottom. I mean, if they were going to try to pick a bottom, this was the previous lows on the last two little dips. It's a major support here as I'll zoom out and you can see, but it's holding so far. Over the last couple of days, it held. We got another big push up here on Tuesday. This is June 21st as I'm recording this. Today got another 2% little pop up to about 108. So it was continuing to build on this bottom, trying to form a bottom here and make a little rally. So main thing that I like about this is that we have the major support that we can keep an eye on. If it falls below this for this type of trade, you want to get out. And the upside target is going to be back up here to this gap level. It's around $136 per share. So it's calling for a nice little run here over the stock, especially since they got in. I mean, that's a 30% run here that could easily take place over the next 3 months. Now, this level up here, as we start to zoom out, you can see that this was another double bottom on the stock, held here for a third time. Then we had the gap through it. That showed that this was going to be a major area of resistance as we come back up. This previous rally didn't even make it to start to close this gap. So this gap held strong. This is going to be your first level of resistance at $130 a share. We can go ahead and draw a trend line on this as well, just because we do want to highlight that level. This is some key levels to watch if it continues to come back up. If it doesn't even come back up, then you don't have to worry about these levels, but it needs to make it back up past these areas of resistance before it can even be mentioned as like a long-term buy, as a long-term trade for the stock. And as we continue to zoom out, once we get back to these 2020 levels and beyond, now this is 2019, and look at this major level of support that has held. This goes back to the top in 2018, was tested again shortly later. That's what kind of created the little double top. Then it hit this level again in 2019 as a top. Basically the exact same level, just over $100 a share at this is post-split prices. So we're talking about it after the split. And then when we come back here, it gapped right up to this level, ended up breaking it, but then came back down to the same level and went below. So we had a gap that took us right up to the level. Then we had another gap to the downside that took us right below it. Then we came up, hit it again, and then we had a big explosion day here. This is 2020 when things were starting to run for the stock, but a big day after this key level and off to the races since then. Now we're back to this same level. Now we're back to flirting with this level, and that's going to be a major area to watch here over the next few days, over the next couple of weeks. For today, I am going to throw this on my bank it list. I love Amazon. I think what they're doing puts them in an ideal position overall to continue to benefit. I mean, the stock is on a downtrend right now. We can see that the share price has been moving lower. It's down about 45% here just in almost just in 2022, just in the last 6 or 7 months or so. This stock has been hammered 50% almost. So it's been beaten down, and now we're trying to form a bottom here. If this holds, then we want to keep it on our bankit list and look for this stock to head higher. But if this level goes just under $102 a share, if it closes below that, then we want to avoid this stock at all costs. I think things can go a lot lower. This is something that I continue to write about, is that I don't think we've seen the bottom yet. I mean, I hope we have. We're going to continue to trade these stocks just based on the key levels that we see and the key trends that set up, because that's going to get us in a position to benefit whenever stocks turn and actually mount the ultimate rally out of this. We're going to be in and we're going to be along for the ride, and it's going to be key levels like this that really suck me in and make me want to buy this thing. So Amazon is a stock that I picked for today because I think it's one that's on everybody's mind pretty much all the time. I mean, it's a stock that we use in our daily lives. We're buying things from it. But then also, as I was just talking to people here during the volatility that we've been seeing, Amazon's been a stock that keeps coming up that people are just, they like it. They wanted to buy it before the split. They're buying it after the split. They think that since it just did a massive split, 20-for-1 split, that's great news. And this is what we've seen before when Google split, Tesla split. These stocks would split and then move higher. It's a different market environment today. So while I think that the split will help the stock, it'll help it bottom quicker than it would have otherwise, it's also not going to lead to an immediately higher share price. Now, we got a key support that we're going to be watching. That's why it's on our bankit list today. This is a stock that I love. I think that it's going to outperform over the next 5 to 10 years, regardless of where the ultimate bottom is here in this pullback and that we're seeing in the market. Amazon is going to be a big winner. But for today, we're going to watch that key level on the chart. We're going to have it on our bankit list, and we're going to see if this split will help lift shares here over the next couple of weeks and actually do enough to keep it in that bankit range for the stock. So that's all for my video today. Again, if you liked it, be sure to click the like button. Let me know what you think about it. Leave me stocks that you want me to feature in an upcoming video. I'll do another one next week featuring some of the stocks that you leave right here below this video. Those will be stocks that I talk about. So look, we're in a volatile market right now. Each week I'll continue to talk about what I'm seeing, things that are changing. But most importantly, we're going to stick to the price charts and look at how these stocks are trading in the market and what you can expect from them next, regardless of what else is going on. These are the key levels to watch for each individual stock. So until next time, I'm Chad Chu.